Markets are no surprise reacting to the election, and joining us with the reaction on how those markets are reacting is Darin Newsom with Darin Newsom Analytics. Thanks for your time, Darin, on such a short notice. You were talking about the US dollar and a drop
Mhm.
in gold. So just paint the picture for us. How are the markets reacting?
Yeah, it was interesting, initially very, bright and early this morning, as soon as, everything kind of became known and the results were kind of released. We saw the US dollar the dollar index just skyrocket against global currencies, gaining as much as 2 full points. This is an unusual move. At the same time, Treasury yields were going up. All of this, with the outlook being we're going to continue to lower interest rates. The president-elect is a fan of low interest rates, and even once talked about going into negative interest rates and keeping the currency weak. So it'll be interesting to see how all this plays out. And on the flip side of the coin, we had gold fall almost $90 overnight through early Wednesday morning, and some of this to me looks to be. Over the last few months, with gold making new all-time highs, investors continued to buy, not as an investment, but as a hedge against their other investments in other sectors. And then now that some of the uncertainty has been erased, we see U.S. stock markets spiking to new highs here early Wednesday morning. So those positions were being lifted; those long positions were being lifted in gold, and it put a lot of pressure on the market since about mid early morning, however we want to say it. Everything has started to stabilize. Those knee-jerk reactions are starting to fade away, and we're getting into a bit more consistent trade.
Darin, when you take a look at the grain complexes, walk me through that reaction and maybe some of the factors that are behind that.
The initial thing that we saw in grains is the soybean market lost double digits overnight. And so we know that there's going to be increased tensions between U.S. and some global trade partners, and those where we already have trade wars in effect. Those are probably not going to improve anytime soon. We also know more tariffs have been promised, so we'll see how all that plays out. But again, similar to the other markets, we've seen gold go higher. We've seen, excuse me, not gold, but we've seen corn go higher. Here early Wednesday morning, and we've seen soybeans erase much of their loss. So the buying is coming back in. We do have some commercial buying going on, and I think again some of this is on the concern of what's going to happen after January. So we're seeing some end users, some global partners going ahead and buying now. In the case of soybeans, that's seasonal, but we're seeing some global partners buying corn and soybeans now. In For the fear that they may not be able to do so quite so freely once January comes.
Darin, let's round it out with this. This story is just beginning as we head into the future, maybe the next couple weeks or couple months. What do we watch for?
I think the number one thing that I'm going to be watching for is certainly in the U.S. stock indexes, because again we spiked to new all-time highs early Wednesday morning, and we could still close the month lower, and that would be a dramatic move. U.S. dollar, I don't think is going to hold its gains either. And then again, we're going to want to see if we can start to build some long-term commercial support in corn and soybeans, and we can read this by looking at the longer-term spreads, and if we see those starting to get a little more bullish. Not only could it be from the U.S. situation, but also possibly then we turn our attention back to the weather in South America.
All right, Darin Newsom joining us with Darin Newsom Analytics on a reaction, how the markets reacted to the election. And Darin, we appreciate the time last minute. I'm Alex Makovica reporting for the Rural Radio Network.